Welcome back to First Issues. In a previous episode, we had a look at homeowners insurance with Kagiso Mooko. Kagiso shared that this is coverage for the physical structure of homes against threats such as fires, burglary, and natural calamities. She returns tonight to discuss householders insurance. What is it and how can you get it? Kagiso, we're back with you again following our conversation on house owners or buildings insurance. Today now we're talking about insurance for the contents of the home, which is householders insurance. Let us talk exactly what that is, what does it look like, eligibility matters, and what would make you not eligible to claim.
Householders or house contents insurance is insurance for items within your house. So items that you would leave behind when you go to the mall or you go to work. Items where I like to say items where if you were to flip your house, they would fall. It covers your bed, your bedding, your carpet, even your cutlery. Contents of your fridge and your fridge are covered under a house contents policy. Your house contents policy insures you against fire, theft, lightning, and flooding. When you insure the contents of your house, you do not get to pick and choose and say, I would like to insure my television only or my television and couch only. We insure everything that is in the house. So you would get an inventory form. You will sit down and say in bedroom number 1, I have a bed, I have linen and carpets to this amount, the TV room, the study, the kitchen, and you will do a summation. You insure contents that belong to you. So say you are renting, you came with those contents. The house is not yours, but the contents belong to you. So the landowner or the landlord cannot insure your house contents. If you move from one building to another, one home to another, you need to update your policy and say, I have moved from plot 5 to plot 7. On a regular basis or on a yearly basis, you need to update. My house contents were 100,000 in June. I've now bought new furniture and my house contents now sit at 150 or 200,000 pula. The value of your contents will determine the premium that you pay. You can pay your premium once off for the whole year, or you can choose to pay your premiums on a monthly basis.
Let us talk about asset depreciation in value. So obviously the value or the quality, quote unquote, of an item is not the same throughout. So if I buy it today, it's the value, say for example, is 50 pula, and if I were to try to sell it to somebody in 2 years even, it's not going to be 50 pula. So how does that affect my premiums and how much I say to my insurer that this is how much my contents are valued at?
Your policy runs for a period of 12 months, as I've already said. Anytime during the course of the insurance period, you may go back to your insurer and say, I bought this TV 5 years ago. It's no longer valid at the same amount at which it was 5 years ago. Please reduce my value or my contents value to 50,000 pula from 55,000 pula. The same on the flip side, you have bought new furniture, you then go back to your insurer and say, please increase the value of my contents from 50 to 200,000 as I've now redone my whole living room.
Let us talk about eligibility. When do I claim and when do I not claim?
You will claim when your policy is in force. That means it's in the current insurance period. Your premiums have been paid. The cost of the loss is an insured event. Was it as a result of fire? Was it theft? Was it attempted theft? Because that is also covered under your house contents policy. Was it because of flooding? Then you can bring forth an insurance claim. And when you do claim, obviously there's a claim form that you will need to complete. You will need to bring quotations for the same or similar item that you are claiming for. In cases of theft, you will need a police report. So you'd actually need to report to the police that there's an incident at my house, and they will come and have a look and give you the police report. You can only claim on a policy that belongs to you. That means you are the policy holder. You are claiming for items that belong to you and not against somebody else's policy. You cannot claim for items, as I've already said, that do not belong to you. You cannot claim where the insurance policy does not cover. You mentioned depreciation. Yeah. So your TV, over time, it deteriorated and it just stopped working. Then that would not be a valid claim. So, Ponatel, I did mention that house contents insurance is for items that you would leave in your house. Yeah. When you go to the mall, when you go to work, when you go on a trip. There is insurance for items that you would carry or you would wear. Your watch, your jewelry, your sunglasses, and these are covered under what we call a personal all risks policy. Personal all risk items, you can carry them anywhere in the world, and your policy will cover you for the loss or the damage to those items.
Is there a limit to how much you can have or how many items you can have under the personal all risk cover?
I'd like to insure my cell phone. This is the value, this is the make and model, and the serial number. You are paid or you are indemnified up to the value of that item. You can have 5 cell phones, 5 watches, all under one policy. The all risk section policy is not a standalone, which means you do not insure it on its own. It will go hand in hand with your house contents policy. There's 2 sections, the householders and the personal all risk section of your policy are offered under our F&B personal lines product.
Kagiso returns again next time to talk about motor insurance. For now, thank you so much for watching First Issues.